It is the early 1980s and Wall Street is filled with Patrick Bateman-type characters. America is all about getting people into mindless consumerism through ads like this.
What a great way to open a party.
Also, yuppie culture is at its all-time high. All of this will later inspire the character and movie American Psycho. But as we all know, the movie does not end well. A new breed of Wall Street managers is emerging. They are ruthless and amoral, only driven by one single factor: greed. And above all of them is our hero, Michael Milken, the king of junk bonds. His rise is a play of capitalism at its finest, proving that a single idea cannot only change your life but the course of the world. Born ambitious, Michael establishes one of Wall Street's most important instruments. That instrument will catapult his net worth to over $6 billion today. This is the story of one of Wall Street's most spectacular rises, a terrifying downfall with a $600 million fine and 10 years of prison that could only be pardoned by a US president.
Mike Milken, who's gone around and done an incredible job for the world.
Michael Milken is born on July 4th, 1946 in a sleepy middle-class town in California, Encino. Surrounded by fireworks and post-war euphoria, his story begins as one of America's greatest eras is about to start. In all of this, Michael is going to leave a mark soon too, but unlike his peers, he doesn't want to change the world by saving humanity and developing new technology. He wants a high-paying job on Wall Street to get rich, and getting there is no easy task. The top players in the game, Goldman Sachs, Morgan Stanley and JP Morgan, all get to choose from the best of the best. Michael knows this and decides to dedicate everything to his dream of becoming a yuppie millionaire. From early on, he has the characteristics of a future overachiever. He is intelligent, a critical thinker, a slight psychopath maybe also, and is willing to work harder than anybody else. Not only is he elected as a member of Phi Beta Kappa, the most prestigious academic society in the US, home to highly successful people such as President Roosevelt and Jeff Bezos. In 1968, Michael's effort pays off. He graduates with a Bachelor of Science in Business Administration from UC Berkeley with the highest honors achievable. Like a true insecure overachiever yuppie, he travels across the country to join the prestigious Wharton Business School, a talent factory for future masters of the universe. It's all going according to plan, and Milken secures a summer job at the investment bank Drexel Harriman Ripley with the help of his professors, a major player in the world of finance back then. After graduating with his MBA in 1970, he joins the firm full-time. His colleagues are all replaceable Wall Street chads that only pride themselves in their business cards and their restaurant reservations. Restaurant reservations they obviously don't make themselves. You see, if you want to play in the big leagues, if you want to increase your net worth, you need to outsource any work that is not worth your pay grade. This is how finance legends work. Break up with your girlfriend? Let your assistant do the talking. Make a restaurant reservation at Dorsia? Assistant. Want to flood the market with junk bonds? Let your assistant do the research first. Milken, his colleagues, and myself all relied on personal assistants, and the best quality assistants you'll find at Wing. I trust my Wing assistant with handling my money, so doing payments and my accounting, planning my evenings when I go on dates for example, and even handling some of the marketing for Giga University, for example SEO. The money I invest is minimal compared to the money I generate with a good virtual assistant by Wing. Because a really good virtual assistant can tailor applications for you and reach out to hundreds of people on LinkedIn to schedule networking coffees, or even help you build side income, for example by researching profitable niches for automated YouTube channels or researching websites you can buy and benefit from their cash flows long term. There's many more use cases and I'm happy to share them with you if you're interested. For now, check out the link in the description below and get yourself a virtual assistant. Probably the highest ROI investment you'll ever make. But Milken soon makes a discovery that will change the face of finance forever and put Mike up into the ranks of Wall Street's most legendary investors and bankers ever, who are all portrayed on this channel, which is why it's a disgrace you're not subscribed yet. The world of investing is basically dictated by a graph like this. The more risk you take, the higher the reward. But what if the correlation is not perfect? What if we can get into this area above the line, so we earn higher profits, but we keep the risk low? That would be revolutionary. While still studying at Berkeley, Michael Milken makes a discovery that will later change the world of finance forever. Michael is a focused guy. He's determined to succeed. Countless hours are spent in the university library to come up with new revolutionary ideas and investments to make it big in business. And as chance would have it, he stumbles across a paper published by Walter Hickman, former president of the Federal Reserve Bank of Cleveland. A small book titled Corporate Bond Quality and Investor Experience holds the future secret to the world as we know it today. Hickman discovered that below investment grade debt earned a higher risk-adjusted rate of return than investment grade bonds. But what does this mean? First of all, bonds are a type of investment where an investor loans money to a company or government and earns interest over a set period. Below investment grade debt, more commonly called junk bonds, are riskier because their issuer has a low credit rating, typically BBB or lower. Those companies may not be able to pay back the money they borrowed and thus are more likely to default on their loan. Higher default risk means higher rate of return, if the default doesn't happen. Walter Hickman, though, discovered that even if you factor in the additional risk of these bonds, you will be better off investing in these bonds than investing in safer alternatives, a so-called higher risk-adjusted rate of return. If this really works, could it be the holy grail of investing? In 1973, Drexel merged with Burnham & Company to form Drexel Burnham, and most of the staff was laid off. Michael Milken is one of the few lucky survivors. A good banker on Wall Street is a man that earns money for his clients, but a great banker earns a fortune for himself. And Milken strives to be the best. When he remembers his earlier bond discovery, he drops everything and immediately rushes to his boss, Tubby Burnham, to convince him to start a high-yield bond trading department. Burnham is skeptical about it. The market for such bonds is fairly limited and has not proven to be sustainable in the past. Allowing him to start his department is a speculative risk for the company, especially after the merger. But if there is a single truth on Wall Street that holds up to this day, it's you need to do what nobody else does. After tough negotiations, Burnham gives his okay and Milken gets to work. As head of his department and equipped with some capital, he puts his theory to the test and starts trading the debt of so-called fallen angels, companies whose bonds have been downgraded to the point that they are no longer considered investment grade. And it works out. Soon after, he pulls in incredible 100% returns and becomes the shooting star within Drexel. For his efforts, he is rewarded with a bonus equivalent to more than $25 million today, achieving his dream of becoming mega rich and practically turning into a multi-millionaire overnight. If it was any regular person, they would probably just quit their job and this story would be over right now. But we are talking about one of the most legendary financiers Wall Street has ever seen. A couple of $1 million are not enough for Michael Milken. He wants to go above and beyond. Milken has to find a way to grow his division. There's only one problem. The market for junk bonds is limited. But how do you sell something no one wants? As a rising star among Wall Street professionals, there's only one correct answer. Let's create a whole new market. To understand how Milken does it, we first need to understand what type of company issued bonds and who bought them. Every company needs funding to grow its operations. If they don't have enough money to fund their investments, they need to turn to creditors to provide them with cash. They could borrow from commercial banks, but that often means committing to unpredictable, expensive, short-term interest rates. They could also borrow from insurance companies, but those often restrict how the money can be used. Or they could turn to the capital markets and issue their corporate bonds. Most of the potential buyers, especially the ones with a lot of capital, are often only permitted to invest in investment-grade bonds. Only the 600 to 700 largest corporations in all of America qualify for such a rating. All others are closed out of this $500 billion capital market, and Milken wants to find a way in. Michael Milken has to find a way to establish his high-yield products among these sluggish capital managers. He begins pitching his idea to a handful of risk-averse money managers. During the meetings, Milken is not just another narrow-minded Wall Street trader, but the very best salesman they have ever seen. In his ambitious yet charming manner, he explains how rating agencies are actually a huge scam. They are measuring the past, not the future risk, and thus massively misjudge the company's ratings and ignore their growth potential. When pegged to their future cash flows, these risky companies are great investments and you can buy them for pennies on the dollar. Low risk, high return, that's all the managers have to hear. Soon, the money just comes rushing in as more and more funds open up to the idea of investing in junk bonds. Every day, his network of money managers keeps on growing. Hundreds, thousands of them. This is how you become a billionaire. He soon not only trades bonds, with psychopathic precision, he engineers junk bonds individually to the needs of entrepreneurs looking for funding and then passes them on to his network of buyers. Entire industries like cable TV, healthcare, and regional airlines are built from the ground up and only made possible with capital supplied by Milken's network. The attention and confidence he creates around high-yield bonds are the foundation for corporate raiders like Carl Icahn taking over and disrupting companies, generating billions in profits. This also enables rising entrepreneurs such as Henry Kravis to build Kohlberg Kravis Roberts, the behemoth private equity firm KKR, during the leveraged buyout boom in the 1980s, and he's conducting deals worth tens of billions with Milken, and finally leading to his downfall. If you haven't watched our Icahn and Kravis documentaries, the two were similarly influential and also had a bit of a public image problem at certain times. In the late 1980s, billions of dollars flow into junk bonds and the total market has grown to a total volume of 150 billion US dollars, turning Drexel Burnham into the most profitable investment bank at the time. Drexel's bond trading department, led by Michael, accounts for at least half of the firm's profits. Needless to say, Milken commands power and respect around the world. Each month, they conduct more than 250,000 transactions. Whatever bond he is looking to sell, his team of highly skilled traders always find a buyer available and looking to invest, earning the equivalent of more than 1.4 billion US dollar in 1987 alone. And having that much power over the junk bond market, Milken is commonly called the king of junk bonds. If you would find yourself in Michael's position, everything seems perfect, but as we all know, nothing lasts forever. And just like in American Psycho, in the case of Michael Milken, it all goes up in flames like a burning inferno. Often it's accomplices or lower-ranking members of the organization that lead to the mob boss's fall. Also on Wall Street, you can't expect others to keep your secrets forever. In a world filled with egoistic and greedy dealmakers, where everybody walks, talks, and acts the same, most would trade information about their colleagues when put under pressure by the FBI or SEC. And so, a series of events is unleashed that will ultimately ensure the fall of the legendary Michael Milken, the king of junk bonds. It's a cold, gloomy November day in 1986 when stock trader and arbitrager Ivan Boesky gets a surprise visit from the SEC. Boesky, who amassed a fortune of well over $200 million by betting on corporate takeovers and the sale of the Beverly Hills Hotel, is accused of conspiracy to commit violations of federal securities laws. His sources, the two investment bankers Robert Wilkes and Ira Sokolov, got busted for providing him with inside information about tender offers and mergers for companies such as Nabisco Brands, R.J. Reynolds, and Houston Natural Gas Corp. The SEC has him in a tight grip. The story of Ivan Boesky is the first time insider trading laws were ever fully enforced. After hours of interrogation, the consequences are presented to him. Faced with the implications of his actions, Ivan breaks up in sweat and furiously searches for a way to defuse the situation. The SEC officials enjoy their work with a devious smile. They got him right where they want him. Boesky is a relatively small fish, and the SEC wants to go after the great white shark, Michael Milken. Agreeing to a deal, Boesky pleads guilty and implicates Milken in several illegal transactions such as insider trading, stock manipulation, fraud, and stock parking, the act of buying stocks for the benefit of another. That's exactly what the SEC needed. They have been suspecting Milken since 1979, but couldn't find any evidence up till now. They finally have enough information to probe Drexel and get them to launch an internal investigation. For nearly 2 years, all remained quiet and still, but then, out of nowhere, everything comes tumbling down, leaving everyone in shock. In a matter of days, the glorious story of junk bond king Michael Milken comes grinding to an instant halt. The internal investigation team of Drexel lawyers has been going through reports and documents, trying non-stop to find something unusual. What they discover marks the end of an era. Back in 1985, private equity firm KKR decided to take Storer Broadcasting, a media company that operated several radio and television stations, private in a leveraged buyout. As with many deals during the LBO boom of the 1980s, KKR used high-yield bonds to finance this investment. They decided to issue new bonds with the help of Drexel Burnham in the role of an underwriter. So, Drexel assisted KKR in the process of issuing the bonds and buying and reselling them to investors. As a form of compensation, Milken negotiated warrants. These warrants give the holder the right to buy a specified amount of stock at a certain price within a certain period of time. The warrants were initially sold for about 9 cents each to fund managers and others with close ties to the junk bond department. They later received $4.88 per warrant, a profit of more than 5,000% in a matter of months. This is where things started to go the wrong way. Michael, multiple executives, and even clients formed partnerships to invest their own capital and earn extraordinary returns. Milken kept 80% of the warrants in partnerships such as MacPherson Partners and tried to conceal it by transferring them back and forth between multiple legal entities, all of which he controlled. Later, he used them to bribe mutual fund managers and executives to get them to buy the risky bonds issued by KKR. As the investigators figured this out, they immediately reported to the government and the public, putting Drexel under maximal pressure. The next day, December 21st, Drexel Burnham enters a guilty plea to 6 counts of stock parking and stock manipulation. Adding to this, they pay $650 million in fines for their manager's illegal illegal behavior and lack of supervision. The at the time largest fine ever. Soon after, Michael Milken gets indicted and is forced to leave the firm he spent his whole career at. He pleads guilty to 6 counts of securities and tax violations, albeit not insider trading, and gets sentenced to 10 years in prison and a total of $600 million in fines. Oh, and he's prohibited to work in the securities industry ever again. His network of bond issuers and buyers falls apart, the junk bond market collapses. Drexel Burnham Lambert, once called the greatest investment bank of all time, goes bankrupt. It seems like the story of one of Wall Street's greatest legends has come to a dramatic end. Locked up in prison for a decade, among violent thugs and killers, who wouldn't be afraid?
But I needn't have been. See, for a brief fleeting moment, I'd forgotten I was rich. And I lived in a place where everything was for sale.
Prison is just something the average person is afraid of, but rich people, they fly above the law. When Michael is sentenced to 10 years in prison on November 21st, 1990, Judge Kimba M. Wood tells him her honest opinion.
When a man of your power in the financial world, at the head of the most important department of one of the most important investment banking houses in this country, repeatedly conspires to violate and violates securities and tax laws in order to achieve more power and wealth for himself and his wealthy clients, and commits financial crimes that are particularly hard to detect, a significant prison term is required in order to deter others.
Kimba Wood clearly had high hopes about sending Milken off to prison, just to be hit by the reality of incarcerating truly powerful men. Michael only serves 22 months, barely more than a fifth of his sentence. He walks out of prison in January 1993, and at first glance it seems like Michael has learned his lessons in prison. Michael begins his lifelong philanthropic journey of donating millions to support education, health, and community building initiatives, mainly focused on cancer research. Milken had prostate cancer himself 1 month after his prison release. He even founds his own institution, the Prostate Cancer Foundation, which funds research on the prevention and cure of prostate cancer. Aside from advocating for medical research, he also authors books and articles on finance, delivers speeches at conferences, and campaigns for criminal justice reform, such as reducing mandatory minimum sentences and increasing access to parole programs. Besides all the philanthropy, Michael has not lost his business sense. Even though he is banned from working in the securities industry ever again, he still works on growing his net worth even further. Milken has investments in private equity, hedge funds, and venture capital, netting him a fortune of $6 billion, much of it from the buyout of one of his biotech investments, Kite Pharma. Kite Pharma is a company that develops cancer immunotherapy products, focusing on cell-based therapy. When the pharma conglomerate Gilead Sciences took them over for $11.9 billion in 2017, his net worth increased to $3.6 billion, an astonishing growth rate of 44% in a single year. With his financial success back on track after getting out of jail, there's only one thing left to do: getting the sentence off his record. There's only a single person in the whole world who can grant him a pardon for the crimes he has committed: the President of the United States of America. Since his release, Michael Milken attempted to secure a pardon from every single president in office, and he eventually succeeds with a fellow businessman. Donald Trump grants the pardon. Regardless of what you think about his actions and the pardon, the life of Michael Milken truly is the story of a villain turned hero, a street-smart kid desperately trying to make it in this world, transforming the world of finance, ascending into its hall of fame, and coining an entire generation of bankers. Although turning too greedy throughout his career, Michael has undoubtedly altered the world as we know it forever.